welcome to Let's Invest Right. I'm Hassan Ayub. If you're looking to invest in cryptocurrencies or stocks or ETFs, down below in the comment section, we have provided a link. That's an affiliate link. Go to that link and sign up. And do let us know if you have any questions or feedback. Thank you. And today we will discuss about an interesting topic about for the investors, what they do when the market corrects or crashes. When it's a red week, red day, red month, what you're supposed to do. If you're a long-term investor, then you don't have to worry because it's an opportunity for you. Opportunity to make more money, opportunity to invest more, buy more shares. Instead of getting out of the market, you have to go into the market. That's what people don't understand. Why? Well, there's a fear when it's a red day, when the market is going down, when the stocks are going down, whether it's a particular industry, a stock, a company, or the overall market, or the overall S&P 500. People don't understand it's an opportunity. Well, if the tide is going against you, that's the time. If the market is going down, that's the time to cash in. That's the time to invest in the market. Instead, people no, it will go down further, and then they go back and go sell out the shares. Well, again, if you're long-term investors, if you're investing, so don't be worried. Be patient. Patience is one of the keys to be successful, and which is a difficult thing. So people are want to make money very quickly, and then they just want to sell off because it would crash up. Don't worry, the fluctuations would be there. It has always been in the stock market, and it will continue to be there. So instead of cashing in from this volatility or the movement of up and down of the stock, hold your shares, because if you are investing fundamentally right in the company is doing the basic things right. If you are doing it correctly, then it is for sure that the stock, the company, the market will go up with the growth, with all these, if the company is right. But if you are investing in just based on gambling, speculations, without knowing the fundamental analysis, doing the right homework, then it is for sure the market would go down. Your company could go down because, for example, people keep on investing in the penny stocks, and the penny stocks the base is not there. Fundamentally, the company is not correct. It's financially, it's not strong. So if you're investing in such a company, well, you are bound to go down. Then there's no point, right? Because you have not thought it. Even there are companies that would penny stocks that may see a good potential. If you invest in those, if you think the product is right, they are new companies, they are coming up with a new product, new technology. If you invest in those, that makes at least a sense that you are a firm believer that this product, this service would make wonders, would do good, and then if they do good, your returns would be massive. But at the same time, if you're investing in such a companies, these stocks go down at a much higher pace. If you compare some of the penny stocks versus some of the large firms, say Apple, Microsoft, Google, they have not gone down at the same pace. While if you compare this with the penny stocks, they have gone down at a rapid pace when the market is correcting itself. And mind you, if you look at the S&P 500 index, if you look at the Nasdaq index, all these are much higher. So we talk about the corrections because of the coronavirus and all these. But right now, if you compare versus last year, or even the dip in the March, before the pre-pandemic that we say, the post-pandemic, right now the current S&P index is much higher than the pre-pandemic index. So a correction is bound to happen. If you talk about the market was down and going down and it crashes in the month of March, so it is the pace is going up, but sometime it is bound to correct itself, right? Now there's some issues going on still for the virus, and but with the vaccines out and all the market, people are coming back to normal, flights are starting to go up, so things are getting to normal. In this video, we will discuss about 5 strategies that we should do as investors when the market corrects itself or crashes. So if you like the video, press the like button, subscribe to our channel, and press the bell icon. Share your comments in the below section. The first strategy that we will discuss when the market corrects itself is to look at your portfolio. Look all the stocks that you have, look the bonds, whatever you have in your investments. Do a percentage. Are you investing more on a particular company or a particular stock? Are you balanced? Is your portfolio balanced? If not, then this is the time. This is the time to invest more and balance your portfolio. If your portfolio is more skewed towards a particular industry or a particular company, then maybe it's a good time to diversify. So looking at your portfolio and where you have invested would be one of the main strategies when the market crashes. Because when the market is going up, you don't at times consider what your portfolio is. Are you skewed towards one of the stocks or one of the companies? Is your portfolio more inclined towards a particular company, towards the industry? Maybe just look at your portfolio, look at the investments, look at as percentages, as a dollar amount as well. Are you more maybe if you have invested too much in a particular company and that industry is going down, are you missing an opportunity? Are you at risk? So this is the good time to look at your portfolio, analyze, evaluate, and then rebalance your portfolio. The second strategy that we would suggest, if you have looked at the portfolio, if it's balanced, the second would be to not sell your stock. Well, if you are active on social media, and especially looking at these trends of the hashtags of these stock markets, S&P and all these, and maybe of your companies that you like, then people would be speaking about the stocks to sell it. But now this is not the right time. Don't sell your stock, don't panic. Because if you panic and sell your stock, you'll lose the opportunity. Well, investors do get panicked when the market crashes. They feel now everything will go down. Well, these short terms and long term, these dips are assumed to come. They are supposed to come. If you don't have the patience, don't have the, if you can't imagine, if you can't think about these short terms ups and downs, then you're not for the stock market. You should not be investing. You have to be patient. Wait for the right time. You have to make your targets when you have buying a stock. Think of what profit would this stock give me, or maybe if you're holding for long term, just keep it. Then don't think about the ups and downs of the market. So the second strategy would be not to sell the stocks when the market crashes. This is one of the things that many people do and they lose the money. The third strategy that we should be doing is to keep our emotions aside. Well, when the market crashes, it's very natural for all of us to that emotions like come to our mind, and they maybe dictate ourselves and to ask us to sell the stocks even at a loss, even at a big loss, because they feel like the emotions come up. Emotions play a big part. It's not like if you're buying or selling based on the emotions, it's not the right thing, because it's kind of a gambling. You are speculating. That's not, you have to do your fundamental analysis. If the company is strong, if the company is fundamentally good, then don't let your emotions play and ruin your investments. If you're investing and keeping aside your emotions, then it would be the right way. This is the right way. For when the market crashes, emotions stuck to our mind, and they kind of tell us like this is the time to sell. But this is the time when you have to put your emotions. Investments and emotions do not go hand in hand. At times it could work, but most of the times it will not give you right results, because you have investments. When you're investing, you have to look at the companies fundamentally, and emotions would be like it's not like if I like a company or a product, just go and invest. It's not like this, because you have to look at the overall picture, the holistic picture of the company, the industry, the growth, what do you expect, what the consumers are. So all these stakeholders, you have to look at it and then invest in the company. So the other strategy is to keep your emotions aside, invest when it's fundamentally right, and not sell. The fourth strategy that we will discuss is about buying more stock. Yes, buying more stocks. When the market is red, when the market is correcting itself, when the market crashes, when everything is down, it's the time to chip in, buy more stocks. Yes. Well, people fear that the market would go down further, or it's a red day, it's not the time to buy. But this is the time to buy. Yes, this is the time to buy, because this is a good time to average out your positions. This is a good time to make more money and inject more capital. If you have cash, inject in the market. It's the time, even if it's a short term or a long term, because when the market will correct itself, you'll take the opportunity and enjoy the benefits of this. When the market is down, the prices are low. It's kind of a sale in the stock market. The stocks that were trading at 100, let's say, they are trading at 80, 70. So it's a sale for you to buy and inject. So it's the right time to inject capital and invest more and buy more stocks. The fifth and the last strategy that we will discuss when the market crashes is do nothing. Yes, do nothing. That's the right way. Well, doing nothing will not, you'll not sell any stock. If you have no more capital, then don't buy any stock. If your portfolio is balanced, then no need to change. If you are fundamentally right, then this is the right time. Just look at the market, just have a quick look, just see the trend, how the market is performing, and do nothing. No need to sell stocks, no need to rebalance your portfolio, no need to buy more stocks if you don't have obviously the cash. If you have the cash, then obviously this is the time to invest. So the fifth strategy is about doing nothing, keeping your emotions aside. Don't panic, don't make any panic statement, don't make any panic decisions, and your portfolio would be going in the right way, assuming all the fundamental analysis you have done in your portfolio and your portfolio is balanced. To conclude our discussion, we'll say when the stock market crashes, it is not the time to sell your stock, not the time to panic, not the time to overthink. Well, if your portfolio is balanced, if you are doing it right, if you're doing it fundamentally right, if you have invested the right way, right manner, in the right companies, then no need to do anything. You will be profitable. The market is supposed to go down and up. The fluctuations will always be there. The volatility will be there. But don't panic. Just stay for the market corrections. If you want to invest more, this is the right time. Go and invest more. Rebalance your portfolio. Make sure it's a balanced portfolio, and then you will be profitable. If you like the video, press the like button. Subscribe to our channel. If you're looking to trade more stocks, commission-free stocks, in the comment section we have affiliate link. Go to that website and then sign up, and do let us know your feedback in the comment sections. Thank you. Let's invest right, and hope you invested in the right way. Thank you. Signing off, SNAU.